Hey guys, welcome to my YouTube channel and to my very first upload. I'd like to say thank you for watching and I hope you stay towards the end of the video. And please don't forget to subscribe, like, and hit the notification bell so that you get a notification every time I upload, so you don't miss out on any content. Right, so without wasting any time, let's get right into it. I am going to do a review for EURUSD, GBPUSD, and USDCAD. I'm going to take you through the trades that I took this past weekend, as well as the price movements behind the trades I took. So let's get started. Now we're looking at EURUSD on the 15-minute time frame. So if we do a deep dive into price movement, we will be able to anticipate where price is likely to go next, or where price is moving away from, so that we can determine our directional bias, so that we can look for trade opportunities in line with that directional bias. So this is Thursday, this is Friday, and this is Monday. Price has been dropping for the past few days from Tuesday, and coming into Thursday, price has been dropping for 3 days. Now we have this unexplainable price behavior, which is probably a news release, a fundamental news release, and we have this continuation move towards the downside that induces retail traders to take sell positions right below this low or at the swing high when price makes this pullback. Now I want you to realize that these are aggressive moves to the downside, which causes retail traders to react to this quick price movement, to take buy or sell positions within the market. So some amount of volume has been trapped at this low, as traders are taking their sell positions into the star move. Because realize that this candle aggressively closes above this price point, and all the people that have trailing stops or protective stop losses, or a stop loss above the swing high, have been taken out within this move right over here. Now, coming into the next day, we have a consolidation and a breakout above this range, inducing breakout traders to take buy positions, and price goes against retail breakout traded buy positions and trigger all their stops below the Asian range. And I want you to notice something here. Coming into Monday, I already have a directional bias that price is gonna drop, right? So I'm looking to take sell trade opportunities, which I did during the London session. So realize that we have a high on Thursday, the London high and the New York high, but realize that each high is lower than the previous, suggesting that there is some amount of trap volume at this area that the market will not release by taking price above these levels. Realize that the London high is below the New York high, and the New York high is below the London high. So coming into the London session, I see that price has dropped, or is moving away from this trap volume area, and this trend line here is the 50% retracement level of this range, right? So we have a directional bias to the downside, and now the market is clearing all the people who got into this down move. It might not be all, but some of the people who got into this down move, people maybe who sold below this low, getting into the sell move, hoping that price will drop towards this level of interest. And what price movement does is it retraces 50% of this move. And remember that we have the spread as well that is able to trigger the stops, trailing stop, protective stop losses, and all the people that late into this move. Price triggers all their stops at this level. Takes out all the people who have their stop losses within this level. So now if you took a trade right here, your stop loss is probably above. You do not get faced by this pullback, or maybe even you had your take profit within this move, or you are looking to hold your position for a larger move, in which you had another down move, which would have probably made your target profits, right? Now, my risk to reward ratio is 1:2. I have my stop loss above the high, right? I add 3 pips to my stop loss above the high, and I also add the spread of the pair. And you'll see why that is useful. Okay. Now, we have a further inducement where we have a breakout to the downside, inducing breakout traders to take sell positions. Price moves against these retail trader positions to trigger the stops above the agent range, and that's where I took my position. Now, prices did not move until the New York session. So you realize that price did come maybe a fraction of a pip above this London high right there, right? And if this is the spread, then price is able to reach up into this area, right? Now, that is the spread, and I add 3 pips towards it. My stop loss is able to hold because price was unable to reach my stop loss. So this trade did hold, and that's the only trades I took on EURUSD this past weekend, in line with the directional bias derived from the price movements. Going into GBPUSD, we have a head and shoulders pattern spread out over 2 days. We have the first shoulder here, we have the head over here, and we have the second shoulder over here. So we have a continuation of the trend. This is a pullback. We will have retail traders coming into this move, right? And maybe they have their stop losses above this level right here, and prices pull back, stays below their stop loss. Price comes on Tuesday. It makes a consolidation zone to further induce selling positions, and realize that price does not come below this low. So already we are able to identify when price moves away from this low that there is some amount of trap volume at this low. Now we have trap positions here, and we have trap positions here. Now what the market will do is it will slightly move away against from all the trap volume at this level and at this level right here. It does not want to scare the retail traders out of their positions just yet. They do not want them to click out, so they will slowly go against them while still also inducing a downtrend. Now look at this bar. In one bar, this bar closes above all this area right here. And the next bar, they trigger the stops above this level. And now all the trap volume to the downside has been taken out. All the sell positions have been taken out and cleared out by the market. Now we have a complete head shoulders pattern. So what this pattern will do is this breakout will induce traders to take buy positions, even though the correct entry might be on this shoulder here. Maybe if you took an entry right over here, your stop loss is below there, you could have made money on this trade, on this head and shoulders pattern. But if you got late in this head and shoulders pattern, then you're in trouble, because now the market maker is inducing buyer positions at the high of the day on Tuesday above a liquidity level. So this is where price has been trapped, and this is where we are anticipating a reversal. But we will only get the confirmation when the day ends, right? So I did not get any trade on GBPUSD, but coming into Wednesday, I already had a directional bias that prices are gonna drop, but I did not get a trade opportunity. The breakout traders on Wednesday got rewarded because there was a breakout below and a quick and aggressive downward move to the low of the day. And if you realize, we have a 64 pip range in the London session. So this was quite a move. The breakout traders got paid on this day. And I just thought I should come over and look at this price movement, because I thought it was great. It was great work right here. It was a great price movement analysis that was able to determine the directional bias for us, or for me, but I did not get a trade opportunity. Coming into USDCAD, we've had 9 days of rise since the last down day, and all I was just expecting here was a reversal, because now breakout traders have been piling up onto this move. They have been rewarded during this 9-day rise of price movement, and all I was looking for was a reversal. Now I saw this aggressive move to the high on Tuesday, and then I realized that okay, price has been coming up, but since we are getting an aggressive price movement, it means that retail traders are being induced to take positions, and some amount of volume is going to be trapped. So I already know that I should expect a downtrend for the next day or two away from this trap volume area. And once this day ended, I already knew that okay, I am going to look for sell trade opportunities, which I got a trade over here when price was triggering the pending orders above the agent rate. I took as a sell position. And that's all I had for this past week. We had a nice clean W formation during the agent range just below the opening price on Monday, reversing off the low of the week and ending the day in consolidation.